This is TokenPost, Sonny from TokenPost Korea. We are here in New York. I'm here with Dhruv. He is the head or DeFi analyst for Flare. Can you introduce yourself and what you do at Flare?
Yeah,
and how you got into Flare?
So I currently lead all of the DeFi efforts at Flare. Help manage how we should direct incentives, just DeFi growth and like the ecosystem as a whole. Flare has been mostly focused on delivering XRP yield. So how can we build sustainable yield products? How can we build it on chain in a transparent way? Thinking about the specific types of dApps that we want to onboard, whether it's specific borrow lends, yield trading apps, vaults for users, etc. So we're starting to kind of build out the infrastructure on top of our XRP bridge that we've just launched. How did I end up at Flare? So funny enough, I met my boss through a mutual friend, and then for the first time at a mutual friend's wedding who also works in crypto. We spent years and years talking about crypto, and one day he's like, hey, I'm looking for someone to lead our DeFi efforts. Can you come help? And I was like, sure. And so that's how I ended up at Flare. And then before that, I used to work at a Bitcoin custody firm, mostly focused on helping miners, high net worth individuals learn about Bitcoin custody itself.
That's interesting because like you come from somewhat a different background.
Yeah,
I wanted to know how sort of your background shaped your approach in building the DeFi for Flare.
for sure. I think Bitcoiners are they take security first, right? It's their first consideration. And I think that a lot of those considerations when speaking to a lot of the XRP community is very similar, right? Like they really care about their XRP. They don't want to lose it. They don't want to just put it in silly places and not know what's happening with it and without understanding the risks. So I actually think a lot of the ideals are the same. Obviously, building a DeFi ecosystem is very much different than just Bitcoin itself. But I've found it interesting, fun, and I've learned a lot over the last few years, especially being a decently large protocol that can help its specific protocols grow.
Okay.
Yeah.
So you mentioned that the Bitcoin holders and the XRP holders are very similar, which I agree.
Yeah.
From one interview we did before, it says that 80% of the XRP holders have their XRP in central exchanges.
Yeah.
Sort of and not exposed to DeFi, and which I think you guys are coming.
Yes.
So I agree with that. So as far as your role in Flare is, you are the DeFi analyst. You're leading those DeFi projects and efforts, and you apparently focus on partnerships and capital relationships.
Yes.
Which type of partners? DEXs, stablecoin issuers. Which type of partners are critical for your Flare's growth, and what does success look like for them?
Yeah, so I think about this in a few different ways. So when you look at the growth of these chains that have seen a lot of DeFi growth, volume, TVL, etc., I think we can mimic a lot of that for XRP, right? So that's kind of the first role, is taking a look at like what's working within other ecosystems and how can we mimic that and build a robust ecosystem for XRP holders to trustlessly go onto Flare and then back to XRP. And so the bridge is obviously the first component of that. And then the second component is really getting liquidity within the DEXs, liquidity within the lending protocols available for XRP to be utilized correctly.
Okay.
So that's kind of the first piece. So that's kind of the on-chain puzzle piece of what I work on.
Okay.
You drive a lot of that, like you bootstrap a lot of that liquidity with incentives, and obviously then you get this flywheel of people actually using it, paying organic yields, etc. So that's kind of the first puzzle piece. The second part is essentially just doing capital rounds, right? Going out and being like, hey, we have these products available. What are you guys interested in? And ultimately what you find is XRP is one of the most like community-driven coins out there. Like institutions will hold and trade XRP here and there, but in terms of taking directionality and holding long term, it is a very strong community coin.
Yeah.
Extremely strong.
So almost religious.
It is, and that's actually a good thing. There's this line from Mark and Dreesen, and he says, invest in cults. And it's from like 2016 of him on some Stanford, some Stanford live stream, him talking about Bitcoin actually very early on. So, I mean, it's a good thing that people care about their XRP like that. In terms of capital and unlocking like capital inflows for XRP, a lot of it is approaching exchanges, custodians, and specific players that are essentially trading XRP on a daily basis for them to essentially unlock yield on chain. So the capital rounds are a lot different. It's approaching these already existing pockets of XRP, whether it's custodial wallets, which surprisingly hold a decent amount. Decent is a large one in Korea. Zamin is a very large one in terms of the non-custodial side. And then you also have the custodians and then obviously the exchanges. So those are kind of the three paths of unlocking like the DeFi inflows from current existing pockets of XRP.
Okay. So balancing, as you said, balancing trustlessness and usability.
Yeah.
So the FA assets, system uses agents, collateral providers, and liquidators and challengers sort of to maintain the over collateralization.
Yes.
And security. How do you balance the non-custodial sort of design with the ease of use for sort of the mainstream users?
Yeah, for sure. So the agents essentially focus on over collateralization when they're going in and out of the system, because the most risk when you're bridging an asset is trying to move it from one network to the next.
Yeah.
Right? Once it's on one of the networks, it's okay, but that specific period is usually the most vulnerable, right? And so that's really what this specific structure focuses on, and it's what makes it non-custodial. We're eventually looking to move to trusted execution environments, TEs, for our version 2 of our bridge, but that should be out hopefully in the next 6 months.
Okay.
But that's a little bit separate of a structure. Nonetheless, how I think about bridging and making it easier for users is that, well, if you think about it in terms of like exchanges and custodians, they can essentially do a lot of the legwork behind the scenes for those pockets of XRP. So on the custodians and the exchange side, it's pretty easy. Now, tackling the non-custodial side, Zamin, Decent, is really like where it's a lot harder. So what we're building is we have the bridge now. How can we essentially abstract the users or the user experience to XRP users without having to like fully execute DeFi on chain, right? Okay. Like DeFi on chain makes a lot of sense for you and me that have been around a long time, but new XRP users using an EVM compatible environment
is rather not.
Very hard, very hard. So we're building something called XRPL Smart Accounts, which essentially is going to be a vault that runs strategies on chain that are super transparent for users to see. And users can essentially deploy into those vaults from the XRPL, where they just deposit into an agent's wallet, they then mint it, and then there's one extra step of depositing it into the wallet. Okay. So if you think about a bridge, you're essentially minting from one network to the next. Yeah. Imagine now there's just one extra step on the EVM side that allows you to deposit into a vault, and you don't have to touch Flare. Okay. So it's called XRPL Smart Accounts, where essentially it'll just be deposit withdraw on the XRPL, and you earn yield trustlessly through DeFi protocols on Flare.
I can't wait to see it.
Yeah.
So FSets enable BTC, Dodge, and even XRP holders to sort of create the wrap tokens, right?
Yes.
I think it's XRP. So by locking the original coins in a system backed by a stable coin, collateral, what were the biggest design challenges in ensuring sort of the trustlessness again, and over collateralization, and how do you manage liquidation risks?
Yeah, for sure. So the liquidation risks, these agents have stable coins. So when XRP goes down, they're usually fine. When XRP rips upwards or to the upside, it's usually a lot tougher. Now the agents pools have Flare in them, which essentially softens like the amount of price risk you're taking against stables, because generally if XRP goes up, Flare has some beta to that and also goes up as well. Okay. So agents generally have some protection on the beta, and then they also have stable coins. And again, like agents are crucial for mint and redeem, but they can obviously offload some of the XRPL to the core vault, as we call it, if they think that there's a potential liquidation risk or something along those lines.
Okay. Yeah. I see. So you launched the FXRP, allowed XRP holders to join DeFi. Yep. Yeah, via Flare, and you kept it minting at 5 million FXRP. Correct.
That was the first phase.
Yeah. So early adopters locked over $7 million dollars worth in XRP to mint the cap. What adoption metrics have you seen since then? Yep. And what do liquidity incentives with RFLR rewards?
Yep. Reward Flare.
Reward Flare. Rewards mean for the long-term sort of sustainability?
Yeah, sure. So we minted out, so to give you some statistics about just how we've been minting out and what our kind of phase growth looks like. So with any ecosystem, you want to be able to scale correctly, and that comes with, for us at least, is like, we don't want to onboard just a bunch of XRP. and then people have a bad experience, or it's not enough, or like there's just not like a whole lot to do, or there's some problem with the bridge, and we don't know how we can fix it, etc. So every single rollout has to be in certain phases, and that's how we approached it as well too. First, right? So 5 million XRP was the first essentially phase. We didn't tell any institutions about that, and our community minted that out in less than 4 hours. So you're talking about what's now $7 million. I mean, if you mark XRP at $3, then it's about $15 million, right? So that was within 4 hours with no heads up to any of our institutions, none. We then the next week rolled it out again, another 5 million XRP. That minted out even faster. So we minted it out so we split it out into 2.5 million over 2 days, one for the US time zone, one for the Asia time zone, because we actually, a lot of our Koreans community told us, oh, we didn't get the chance because we launched it during the US hours. So we launched 2.5 million XRP during the Asian hours. That minted out in less than 90 minutes, and then another 2.5 million during the US hours. That minted out in less than 90 minutes, so in an even faster pace, 3 hours. And then we launched another 10 million XRP, about the same pace, and now we're at about 35 million XRP minted, and we're minted out right now. Our next phase should open this week, but I mean, just imagine 35 million XRP. I mean, I'm just saying $3 for just to make it easier. I mean, you're talking over $100 million. That makes Flare the largest XRP ecosystem that exists today. And in terms of usage that we're seeing on chain, over 60% of that is flowing into DeFi. Into, let's say, SparkDex, which is our DEX, and Kinetic, which is our lending protocol, has seen massive inflows in terms of XRP deposits. So you're seeing that actually a lot of our community is very excited about using and learning about DeFi, which is a very strong indicator. We're excited to onboard past the community, like institutions are now speaking to us. They're noticing, but you're minting out these phases. Like, we're very interested in getting onboarded. So recently, the chief product officer of Uphold is like, we're looking into it, seeing what we can do. Right? Obviously, a major exchange that holds a lot of XRP, and we're also speaking to a lot of other exchanges that want an earn program for XRP. How can we provide the services for that? Right? Obviously, there's no deal signed in ink yet with a lot of these exchanges, but we are in conversation and getting very close to being able to bring these offerings to their exchange.
And also some of those tokens similar to XRP.
Yep, exactly. It starts with FXRP, which I actually think will be our main focus for quite some time.
Yeah, there's a lot of it. So.
Yeah, for sure. And I think that a lot of Flare backers are XRP holders. So when Flare first launched, one of our first checks was from Ripple, or a subsidiary of Ripple, and then we also airdrop to all XRP holders on every single exchange. So exchanges all over the world listed Flare because their XRP users got Flare. So there's a lot of ties and affinity to the XRP community. So I think we do owe it to them to really scale out this XRP offering.
Cool. And Korea is a big market for that.
It is, yeah. I mean, we've been, so we're listed on Midtown, and we speak to a lot of the Koreans that hold XRP. I've heard there's a large Korean retirees circle that holds a lot of XRP. And ultimately the focus for us is like, how can we bring sustainable yields to those users, right? And make it conveyed and easy for them.
So Flare promotes full composability.
Yep.
It says for F assets. So FXRP can be used for lending, borrowing on Kinetic, liquid staking on Firelight, and liquid provision on, as you said, SparkDex. How does Flare encourage developers to build around F assets versus competing wrapped assets solutions on other chains?
So the general market as it exists today, there's wrapped versions of XRP, like CBXRP, that exist, but ultimately going back and forth from the XRPL to an EVM environment is very difficult. So if you use the F asset system, within a couple minutes you can go back and forth from the XRPL to Flare. Well, if you're using CBXRP, you're trusting Coinbase to hold your assets, and in order to even offboard into XRP, you need to go back to the centralized exchange, and not everyone has a Coinbase account, especially if you don't live in the US or you're in some jurisdiction that they don't operate. I'm not sure if they operate in Korea, but the two biggest exchanges are Upbit and Bithumb, and CBXRP being accepted there is not available. So going back to the XRPL before you interact with the exchange is a core piece of infrastructure that allows us to get to those XRP users that don't have access to Coinbase.
As you said, I think cross-chain liquidity is very, very essential for user experience, obviously. Does Flare plan native integrations with major cross-chain bridges or L2s, maybe?
Yeah,
so how do you see assets fitting into the multi-chain future where users expect to move assets, I guess, more fluidly?
Yeah, it's a great question. I got really excited to answer it, so I started cutting you off. But so F assets, as it exists today, is an ERC20 that lives on Flare, like a fungible token that everyone is very used to using. What our next focus is building out liquidity on different venues for FXRP to trade. Something that we've been thinking about is Hyperliquid, which has its own order book, has its own EVM environment. Can we introduce XRP there? We're also looking at something called omni-chain vaults, O-vaults, which essentially allow users to deposit into your vault strategies that are being run on Flare from any chain. So O-vaults is a new product from Layer 0 where essentially it allows you to deposit an asset into a 4626 vault, and then those strategies can be run to earn yield on that asset. So for us, I can deploy an O-vault on Base. I can intake CVXRP, turn it into FXRP, and then be able to run strategies and deliver yield back to those XRPs.
Okay.
So for us, in terms of cross-chain, we very much will take F or F assets cross-chain, but the first iteration might look like something like a vault structure to take in other assets first. But we definitely are very interested in building out liquidity on different venues for FXRP. And specifically in places where it's a little bit easier, like an order book style, like Hyperliquid.
Okay, well that's interesting. So this year, 2025, we've seen sort of the rise of DeFi super apps, consolidating trading, yield farming, and bridging.
Yep.
Could Flare-based wallets evolve into super apps for F assets? What lessons can be taken from Solana's Jupiter, or other aggregators out there?
Yeah, so what we've seen from the XRP minting, almost all of it has been through like a few different wallets on our chain. Bifrost has done a lot of it, has done some. And so the idea that we can, as a non-custodial system, abstract that away to just a wallet is really the core focus. And in building out extremely easy user experiences out to Decent, out to Zaman, and these other XRP wallets that exist is our main focus.
Okay.
So ultimately it's like, can we build a super app in most of these abstracted use cases and kind of compact it into an app? Yeah, we're already working on that with our specific wallet providers. I will say, like, we don't try to favorite like any specific one, but there's a few, and there's even one called Luminite that we're helping incubate to be able to offer not only the DeFi solutions or the DeFi yields, but also act as a wallet across like Flare and its specific protocols.
Cool. Let's talk about RWA, a real-world asset. Some analysts expect RWA tokenization to reach over 500 billion by the end of this year. Some say that. How is Flare positioning itself to support sort of tokenized treasuries, real estate, or commodities? Does over-collateralized FS framework lend itself to sort of the RWA collateral?
Yeah, so something that you could do, so the largest RWAs today are generally representation of T-bills, right? So they're tokenized T-bills, which we currently have one on Flare. It's called CUSDX or Clearpool, where you essentially can just put in stables or swap into CUSD, hold it, and you can claim treasury yields, right? So that's generally the biggest one that you see. And what I would say about RWAs is when I think about any type of dormant capital or capital that's being used within a protocol, that's an opportunity for an RWA to be inserted. So imagine that you have, let's just say you have this protocol on Flare and you deposit dollars into it. This protocol is now holding dollars on behalf of you and providing some service. So you're seeing, so the most obvious use case is prediction markets currently. So Kalshi has offers you essentially 3.75% on any of the cash that's in your portfolio, as long as your portfolio is over a certain amount, right? So they take that cash and then they go invest in RWAs, or let's say treasuries. They deliver that yield back to you as long as your portfolios are of that size or larger. Polymarket's already doing this with their elections. What you're seeing is that pretty much every pocket of stables that exist will essentially enable RWA yields, and we will definitely do that for a lot of our stablecoin liquidity that we're seeing as well, and specific areas that you'll see stablecoins existing, potentially even for these agents that are holding stablecoins. Okay. But ultimately, the biggest thing is liquidity for those stablecoins and how fast you can get in and out. and that's really the barometer of like us bringing this to specific places.
Fluidity.
Yes, like how fast can I get on and off of this thing, and am I willing to take that risk for that yield for this pocket of stablecoins that exist?
Yeah, I agree with you. So the traditional finances entered DeFi. JP Morgan launched Kinesis, and Centaura raised 25 million to build permission DeFi.
Yeah.
How do you balance permission pools and whitelisting with Flare's sort of ethos of open access? And are regulatory compliant FSs a possibility?
Yeah, for sure. I mean, ultimately, the system itself is non-custodial.
Yeah.
That doesn't mean that we can't do permission pools or permission lending, or let's say, I talk about permission lending because it essentially can lower your collateral requirements for lending out.
Right.
Because you know who your counterparty is, there's someone tangible, there's potentially credit risk that they're taking on in the real world. So there's been a lot of talk internally about like permission pools, uncollateralized lending, things like that. We don't have a specific strategy that I think I'm ready to share yet.
Okay.
But like it's definitely been a topic of ours, and thinking about how we can essentially offer institutional grade lending on Flare.
Okay. So there's been a restaking boom. Eigenlayer has attracted over $18 billion worth in TVL, and let's stake and stake ETH secure multiple services. Could Flare adopt restaking or shared sort of security models to allow FLR Flare to secure oracles and other services simultaneously? So what opportunities and risks do you see for this?
Yeah, so one of the core pieces of infrastructure that we're building is Firelight, which is our restaking protocol for XRP. And I recently outlined a guide on XRP yield that is now live on our blog. And one of the core use cases of an asset that doesn't earn yield today is to turn it into a yield-bearing asset. So I think what Eigenlayer did well is that they took staked ETH as an asset, or they started with ETH and then into staked ETH and said, we're going to deliver yield on top of this specific asset. So it comes down to like what you can do with the asset as a capital asset to enable earning yield. Eigenlayer started with AVSs, or verification, which turned out to be a difficult business, but what you're seeing and what Firelight is working on is using that XRP to essentially cover markets on Aave or ensure markets on Aave, taking a premium and deliver that premium as a yield, right? And so Centaura, the builders of Firelight, have been working with specific protocols to think about how they can provide insurance to those markets and enable yield back to XRP users. Now, if you've used DeFi, you've likely used Aave. It has 19 to 20 billion institutional deposits. Like the USD deposits are essentially considered like the SOFR is the institutional product in DeFi today. And so like if you are participating in DeFi, that's a very reasonable risk to take to underwrite Aave and take an insurance. And the thing is that XRP is so liquid that you can offer insurances and they'll pay you the premium and take in the XRP because it's so liquid and it trades so much. And so we'll start with the RLUSD markets and then we'll kind of move on from there. And Centaura is really like optimizing that. And so what we're focused on is economically secure services, is what we call ESSs. And we're starting with insurance. And then we're also looking at potentially other different types of lending protocols for us to insure as well that potentially use RLUSD as well, and seeing how we can leverage restaking in this idea of XRP as a capital asset to earn yield for its holders.
Awesome. So in terms of liquid staking and perps,
Yep.
SparkDex,
Yep.
Eternal, offers perpetual trading on Flare using your FTSO, price feeds, and cross-chain liquidity. How do perpetuals and leveraged products fit with your goal of building a safe DeFi ecosystem? Are there plans for liquid staking tokens on Flare akin to Ethereum's LSTs? Yeah,
so we have currently Scepter, which is our LST, which essentially aggregates all of Flare's potential yields into a liquid staking token that's available currently. And obviously we're going to have XRP LSTs as well too, once we have yield that's being delivered through the restaking protocol, something like staked XRP, or if we have a vault, that vault will have a separate LST as well that you can essentially hold, and you'll be given the yields that are being delivered back to the LSTs. So in terms of LSTs, I think they're a very critical component of building composable DeFi blocks within your ecosystem. So definitely going to have a lot of LSTs for XRP and Flare itself.
Okay.
In terms of perps, I mean, it's funny that you asked me this after like the whole Black Friday situation that we had, but
I have to.
Yeah, for sure. I obviously, I'm totally fine with people going long, short, taking risk, etc. But like, I obviously cannot offer any financial advice, but you should take leverage very carefully. But clearly it's a product that people in crypto very much like and want to take direction on assets like XRP or Flare. So, I mean, if they'd like to use it, great. Like, I think that you should just beware of the risks, understand what's happening. There's a lot of things that take to make that ecosystem work. So just read all the disclaimers before you trade.
Okay, great answer.
Yeah.
Change the topic a little bit, talk about stable coins and on-chain money markets.
Yep.
The role of stable coins. Stable coins have become foundational to DeFi and are used in lending.
Yeah.
Yield, farming, and collateral. How do stablecoins underpin the FSX system, and could we see dedicated USD-backed FSX?
Yes. So, like today, agents use them. I think ultimately, if you want the most capital-efficient bridge, having collateral in it is a very expensive thing, and like that's why we moved to version 1.1 is because ultimately, like, having a lot of collateral in a system is an extremely expensive activity. How can we decentralize this product without it compromising on how can we decentralize the product without compromising on decentralization? And that's what version 2 is for TEs, which is there's less collateral within the system that is minting and redeeming, but there's, let's say, an insurance fund or something like that. Ultimately, stablecoins play a big role within crypto as a whole today. There's a lot of stablecoins that I want to bring to our chain.
Okay.
I personally bucket them into like 3 or 4 different types of stablecoins.
Okay.
And so first is like the vanilla one-to-one, right? You have USDC, you have Circle, Issues, Tether, and for years we've just been giving them the yield. Now, when you live in a zero interest rate world, there's barely any yield that they're making on that, right? Because they have to be one-to-one backed. They're only investing in treasuries. So when the 10-year treasuries are only earning you like 1%, it's really hard to monetize at small scale, right? But now when the rates have gone up, Tether and Circle are just printing money, right? Yeah. And so users became aware of that and they said, well, I want the yield for myself. So that's where you saw a lot of the RWAs start to pop up, right? So like Ondo, Clearpool that we have, CUSD. There's just a lot of these, like Sky as well, which is previously Maker, offer you the treasury yield directly back to the stablecoin instead of you giving that to either Circle or Tether. So that's kind of the second one. The third one now that really took off is Athena, right? So that's a delta neutral stablecoin. So when you think about delta neutral stablecoins, they essentially are running a very specific strategy that hedge funds have run for a very long time to be able to deliver you more yield than you potentially would get back on just the T-bills. So when T-bills start to crater, what you'll see is that rates of borrowing will come down, especially as the Fed starts to cut rates. That means that people will take more risk, perps potentially get more funding, which means that you'll likely see like T-bills or RWAs capital start to move to the delta neutrals because it's more risky, but that's where they're getting the yield from on their stable coins, right? And then kind of this third bucket, it's kind of like a semi-bucket where Athena and these delta neutral stablecoins are. It's essentially just tokenized funds. So funds that can run delta neutral, but also have the ability to go and farm specific things on chain or specific strategies that they see potentially could earn more yield. Plasma, for example, was a very profitable stablecoin farming opportunity. Athena can't go and do that, but there are tokenized funds that are out there that are tokenized on chain that do allow you to do that. So I think about it as like a spectrum of risk. How much risk do you want to take on to earn on your stablecoins? How much yield do you want? And like where do you kind of lie in that spectrum? As rates start to come down, you'll see people will get more and more risky on the spectrum. So I definitely could see delta neutral stablecoins and these tokenized funds start to really gain a lot of steam, especially into the back half of the year and early into next year as the Fed cuts rates.
Thanks for the sort of categorization and explanation.
For sure.
That was very neat. So beyond the reward FLR, rewards RFLR rewards, how else will Flare incentivize long-term community participation, especially as DAOs adopt AI delegates and sort of new voting models for governance?
Yeah. So I'm definitely not as well versed in SocialFi for sure. But what I will say is I think DAOs generally were of interest in 2021 a lot. I think like governance is a very interesting idea because it's like there's this token that exists and you pay people for governance, but no one actually wants to govern. That's like the hardest part. So like, why am I paying you to govern or for me to do the work? Although I think it does do some incentive aligning, etc. I think first governance is extremely important, especially if you care about XRP-Fi. But obviously, like it takes a certain type for it. I think SocialFi is interesting. There's been a lot of attempts at it. I feel like I'm yet to see something that I feel like very inclined towards or that I think is going to grow very quickly.
Okay. Flare emphasizes multi-layer security audits by Zelic and Spec. Bug bounties and hypernative monitoring. Are there additional safeguards or emergency mechanisms in place, and how does Flare engage with sort of the white hat communities?
So we have obviously we've done numerous audits on F assets. Bringing a bridge to market is genuinely no joke because you're managing two different chains at once to try to get consensus, right? So we did an audit with Zelic that we had finished up right before our launch. We had a code for Arena. We've done audits with CoinSpec. We have White Hat with Immunify. We have Hypernative that looks at our bytecode to see if there's anything weird going on and has the ability to essentially say, okay, or like has alerting based on bytecode. And the Hypernative team is one of the best teams that I've worked with in terms of like monitoring bytecode and security. Yeah, it is incredible. I would say they're some of the best devs that I've ever spoken to. And so obviously we take security very seriously, especially on a bridge, and that's something to consider. We have ongoing white hats, and we care about security as much as we can do, right? Ultimately, a protocol can go as far as it takes, and it might take some time as well. It's the same with the phase rollout. Like a lot of that is security, ensuring that the bridge is operating correctly. People can go back and forth, etc. Right? So phase rollouts, Hypernative, Immunify, Code for Arena, Zelic, like we're doing everything we can to take sure, or just make sure that security is our number one priority.
Yeah. Dhruv, you've been amazing. I mean, these are some hard questions, and you've answered it. Actually, I learned so much from this. Any last message you have for our Korean audience, hopefully XRP holders and Flare holders?
Yeah, for sure. We have a Korean Flare X account that we tweet all of our Flare updates in Korean for our Korea user base. So if you're based in Korea, feel free to follow that. And we have like 2 people based in Korea that work for Flare on our marketing team that help run that community. They often host events as well too. So if you guys are interested in how you can yield with your XRP, I would highly suggest those events and highly just staying connected or just following our updates. I mean, for us, it's full steam ahead for XRP and F assets, which I think will be particularly interesting for Korea.